Will your LLC be classified as a business or a hobby? Does having an LLC mean you have a business? Having an entity does not mean IRS will allow all your deduction. That's why in this video, I am going to explain to you what you need to know so your business is not classified as a hobby. But before we jump in, don't forget to like, comment, and subscribe so I can keep you informed on all things business. And if you stay to the end, I will show you how to use your business losses and expenses to put more cash in your pocket. Now, let's get after it. In making the distinction between a hobby or a business activity, take into account all facts and circumstances with respect to the activity. IRS is going to look at everything. A hobby activity is an activity not done for profit. This includes activities done mainly for sport, recreation, or pleasure. No one factor alone will decide whether or not you are a hobby or a business. You generally have to consider all factors in the activity when making this determination. I am going to tell you how to understand all 9 factors that IRS will look at when determining whether or not your business is an actual business for profit or an actual hobby. The first factor is, how is your business being conducted? Is your business being conducted in a business-like manner? Are you being professional in your business? And you might not think this is a big deal, but this is a big deal. Are you maintaining complete and accurate books and records? Are you using a software to maintain your books and records? Or are you just kind of writing and jotting things down and not being as professional as you would be? Remember, your business may be smaller than a Google, but your requirements are still the same. So you want to make sure you're keeping complete books and records. That's the number 1 factor that IRS will look at. Number 2, whether or not you are conducting something that has a profit motive associated with it, or whether you're carrying on a personal activity. Let me give an example of what I'm talking about. I had a girlfriend that would do scrapbooking, but she actually did scrapbooking and sold scrapbooks to people. On the surface, it may look like this is not something that she can do to make money, because she actually did enjoy what it was that she was doing, and it did start out as a hobby, but she turned it into a profitable business. So you have to remember, any type of business that you are conducting has to be a profit motive. Can you show IRS how this business can make you money in the long run? Number 3, are you putting in the time and energy into the business? People that are really trying to maximize their profit, people that are really trying to grow a business, they're putting time into that business. I recommend that all business owners keep a journal of the amount of time that you're spending in that business, because you want to make sure that you can prove to IRS that you are putting effort in to trying to get that business profitable. Number 4, whether you depend on income for the activity for your livelihood. Now, this is where I kind of get a little worked up when it comes to this one. IRS likes to say this business that you're starting, you're not depending on it to eat every day and live indoors, because maybe you still have a side hustle going on. This is where making sure that you document your time, effort, and energy in that business is going to be very important. Maybe right now the business is not sustaining your livelihood, but with enough time and enough effort, it will sustain your livelihood. If you are putting in 40 hours on a W-2 job, make sure that you're documenting hours that you're putting in your business, and make sure the documentation of those hours are going up week over week, month over month, so that eventually it makes sense that this business can pay you enough to be your livelihood. Number 5, whether your losses are due to circumstances beyond your control, or are you in a normal startup phase of your business. You have to be very careful when you're starting out a business, because we know what it takes to start a business. We know how much money we have to spend, but you got to make sure that in the beginning of your business, that all the money that you are spending is to get you to income sooner. If you're just starting a business and you're going out and you're buying exotic cars, and that's not really going to further your cause, IRS is going to consider that to be out of range when it comes to the 9 factors. Doesn't mean you can't do it. Remember, there's 9 factors, but just realize doing that is going to be 1 factor down when it comes to IRS. Number 6, whether you or your advisors have the knowledge to run this business. This is very important, because if you are running a business and that business is taking a loss and you don't have any knowledge to run that business, that's not going to be a good feather in your cap. Are you trying to take courses? Are you trying to get with professionals that know what they're doing? Are you part of a mastermind group, a Facebook group? Very important that you connect with people that are doing what you're doing so you can show that you're getting yourself educated around this particular business, and you're not just taking deductions to offset other income on your tax return. Make sure you connect with people that are doing what you're doing and hiring professionals that can help educate you. Even if it means you're buying books, even if it means you're buying programs, even if it means you're studying, show some effort towards getting that education. Number 7, whether you have been successful in other types of businesses. Do you have a history of starting businesses and taking them from a loss to profit? Have you been successful in this type of business before? And let me give you some examples of what that looks like. Maybe you've never ran your business before, but you were paid on a W-2 to be a content manager for Amazon or Google's or Ralph's or some other company. That means you have a skill set, and now you're taking that skill set and starting your business. That's very important. You may not have owned a business before, but you may have a skill set for which you have been paid for that skill before. So don't discount the fact that you were paid on a W-2 job, or don't discount the fact that you volunteered someplace to do this exact thing that you are now doing for which you're trying to make a business out of it. Number 8, whether or not the activity makes profit in some years. Here's the things, my friends. When you are running a business and you're just starting, typically that business is going to take a loss. IRS will look at 5 years and it will say, okay, over the last 5 years, your business has shown a loss. If your business shows a loss 3 out of the 5 years, IRS can come in and reclassify your business as a hobby. They won't do it in the beginning, but when you are 4 or 5 years out, they can come in and reclassify your business. And when that happens, they will not allow you to take any losses against other income on your tax return. So this is why when you stay to the end, I am going to give you a tip on what you can do to avoid that particular issue. Number 9, whether you can expect to make profit in the future. This is where your planning and having a business plan becomes very important. You may be losing money in the beginning. A lot of businesses lose money in the beginning. Facebook lost money in the beginning before Facebook blew up. So losing money doesn't mean that your business won't be profitable in the future. But here's the things, my friends. You need to have some type of plan in place where you can show IRS you can be profitable in the future. That's the key takeaway. And that's what's really important. And I told you that if you stay to the end, that I would give you one of my tips on what you can use to put your cash back in your pocket, take your losses, and be very comfortable doing so. Here's what I want you to know. When you're starting a business, I want you to take all of your write-offs. If you have to spend money to make money, spend that money to make that money. But here's the trick and the thing that I want you to know. Let's say we're in year 1, and in year 1, you started your business and you ended up spending more money than you made, and you ended up with a $9,000 loss year 1. When you get to year 2, you want to make sure that that $9,000 loss has diminished. You don't want a $9,000 loss. Maybe that loss now is $8,000, $7,000. Gradually take your losses down. Gradually increase your revenue line. So let me give you an example. Let's say year 1, you made $5,000. Your expenses were $14,000. So you lost $9,000 in year 1. When you get to year 2, we want revenue to be higher than $5,000. Maybe revenue is $5,001, $5,100. We want to show revenue going up, and we want to show expenses gradually going down so that that loss is less. That's a key component. If you can show a trend that your business is gradually improving. Yes, you're still taking losses. Yes, those losses are going to offset your W-2 income, the other income on your return, but you're going to be able to do it and not worry about it being disallowed on an audit. That is why it's so important for you to stay educated so you can learn all the tricks of the trade. And when you know better, you got to do better, which is why I want you to like, comment, and subscribe so I can keep you updated on all things tax.